All right, today we're going to break down a really simple but incredibly powerful strategy that comes straight from the core principles of Warren Buffett. We're going to look at how you can take a sum like $10,000 and turn it from just savings into a real wealth building engine. Let's dive right in. So, let's say you've got $10,000 sitting there. That is a fantastic start, seriously. But here's the million-dollar question, right? What is the smartest thing to do with it? How do you make sure that money grows into something meaningful instead of just, disappearing on impulse buys or getting chewed up by inflation? That's exactly what we're going to figure out.
And let's get one thing straight from the beginning. This whole money thing, it doesn't have to be some complex, confusing puzzle. People love to make it complicated with all kinds of crazy formulas and risky bets. The strategy we're about to walk through is so powerful because it's simple.
Okay, before you even think about buying any single stock or an index fund, we have to talk about building a solid foundation. Now, this is the part almost everybody wants to skip, and it's exactly where they mess up. Honestly, what you do before you invest is probably the most critical part of this whole process. Here they are, the three things you absolutely have to do first. Number one, it's all about your mindset. That 10 grand isn't for a new TV. It's a seed you're planting for a huge financial tree later on. Two, you have got to wipe out high-interest debt. Trying to invest while carrying credit card debt is like trying to fill a bucket that has a massive hole in the bottom. And third, build that safety net. You need an emergency fund so that one flat tire or a broken appliance doesn't force you to sell your investments at the worst possible time. And if you need more convincing, look at it like this. Paying off a credit card that's charging you 20% interest, that is exactly the same as getting a guaranteed 20% return on your money. No investment on earth can promise you that. The stock market averages about 10% over the long run. So wiping out that debt isn't just a chore. It is, without a doubt, your first and best investment. It's a no-brainer. All right, once that foundation is rock solid, the nasty debt is gone, you've got your safety net, now we get to the fun part. And the strategy itself is just brilliantly simple. You're not going to try to outsmart the market. You're just going to own the market. And how do we do that? With a simple, low-cost S&P 500 index fund. Think of it this way. With one single purchase, you become a part owner of 500 of the biggest, baddest, most successful companies in America. You're not trying to find the one winning horse in the race. You're betting on the whole dang race. And this is where the magic really kicks in. It's the power of compounding. You put that $10,000 in and you just let it be. Assuming a historical average return of around 10%, after 10 years, it's more than doubled to about $26,000. Not bad. But wait, after 20 years, it's around $67,000. And after 30 years, it's over $174,000. And that's without you adding another penny. That's the snowball rolling downhill, getting bigger and bigger. It is the most powerful force in all of finance. Now look, just putting your money in an S&P 500 fund and calling it a day is a fantastic, complete strategy. Full stop. But if you're the kind of person who wants to fine-tune things just a little bit, there are a few simple ways to add some diversification without making things complicated. So here's what that might look like. The core of your portfolio, the big engine, is still that 75% in the S&P 500. Then you could add maybe 15% in an international index fund, just to get a piece of some great companies all over the world. A little 5% slice in cash or bonds acts like a shock absorber, giving you some stability. And then if you absolutely have the itch to pick individual stocks, you can carve out a tiny 5% as your classroom money, enough to learn and experiment with, but not enough to sink your entire ship. And if you are going to use that little bit of classroom money, you have to play by these rules. 1, only buy a business you actually get. 2, look for companies that have a moat, a real competitive advantage that protects them. 3, don't overpay. Demand a margin of safety. And finally, ask yourself, would I be happy owning this company for the next 10 years, even if the stock market shut down? You have to think like an owner, not a gambler. But before we go any further, let's remember this incredibly powerful idea from Buffett. The single greatest investment you will ever make might not be in the stock market at all. It's investing in yourself. Learning a new skill, getting a certification, these things can boost your own earning power for your entire life. And that can generate returns that make the stock market look tiny in comparison. So we've talked about what to do and how to do it. But honestly, none of that matters if you can't master the mental game. Because when it comes to investing, your biggest enemy, your biggest risk, isn't a market crash, it's you. It's the decisions you make when fear and greed take over the driver's seat.
And this right here, this is the minefield where most people blow up their accounts. The temptation to trade in and out all the time, chasing the latest hot stock tip. And the worst one of all, the most destructive trap, panic selling when the market takes a nosedive, which it always does from time to time. These aren't strategies, they are gut reactions. Your entire success hinges on your ability to just not do these things.
This quote is everything. You have to get this. In the short term, day to day, the market is just a popularity contest. It's a voting machine. But over the long haul, 10, 20 years, it's a weighing machine. It eventually recognizes the true value, the real substance of great businesses. Your job is to completely ignore the daily votes and focus only on the long-term weight.
Here's how you do that. You learn to detach emotionally. Just picture the stock market as your very moody business partner. We'll call him Mr. Market. Every single day, he shows up at your door. Some days he's euphoric and screaming, offering to buy your shares for way more than they're worth. Other days he's terrified and depressed, offering to sell you his shares for pennies on the dollar. Here's the secret. You don't have to do anything. You're under zero obligation to trade with this lunatic. You can just shut the door, ignore his drama, and wait for a day when he makes you an offer that actually makes sense. You are in control.
So this brings us to the biggest question of all. Why? Why are we even doing any of this? If you think the end goal is just to have the biggest possible number in your brokerage account, you are completely missing the point. The real prize is something so much more important than that. The goal is freedom. That's it. Money is just a tool. It's a tool that can buy you your time back so you can spend it how you want, with who you want. It's a tool that buys you options so you're never trapped in a career or a situation you despise. And maybe most importantly, it's a tool that buys you peace of mind. That's the real return on investment.
Listen, it really doesn't matter if you didn't start this journey last year or 10 years ago or 20 years ago. It's in the past. The principles are simple, the path is clear, and the absolute second best time to start building your future is right now, today.